If you are new to the stock market and you are seeing it drop right now, you are seeing your stocks from a high start going lower and lower and lower and lower. What should you do? What should be your narrative? Can you still win? And should you stay in the markets or should you panic? Check this video out. Hey guys, good morning. It's my fourth day here in Dubai. It's just a few hours before my next session here. It's amazing how time flies just so fast. It's early and there's a very cold breeze here still. It's March now, but it's still relatively cold here in Dubai. So I'm making this video because the market has dropped. It's down. It came from 8,100 just a few weeks ago when everyone was so excited to where we are right now, where it dropped to 7,500, which brings a lot of newbie investors to the point that what's happening? Is the market gonna drop even lower? Which brings a lot of newbie investors to the point where they're relatively scared because they don't know also what could possibly happen to their investments. Let me tell you this and let me say this from the get-go. That's why I love making videos, because you will see this 5, 10, 15, 20 years from now that the stock market is one of the greatest investments out there. It's one of the greatest investments in the planet, that because it's so great, you need to deploy as much capital as you can. You need to deploy as much excess funds as you can, so that when it dips, so that when markets drop, it will allow you to buy stocks at cheap prices. It will allow you to position at lower prices. It will allow you to position, and it will center you and give you the ability to not just make money now. Please remember, if you're new, don't focus on the now. Don't focus on what you can get today. Focus on how can you build the skills today, but not just that. If you are a long-term passive investor, how can you position so that later on, 5, 10, 15, 20 years, when you plan to retire, when you need the money already from your assets, it's now relatively big. So dips like this, it's okay, it's normal. Please remember, anytime you start investing in equities, anytime you start investing into something that has volatility, this is the name of the game. And volatility will make your stocks or your positions, if you're investing in equity funds or investing in direct stocks, drop. But the payout for this, the payoff, when all of the hype, all of the emotions of being scared are gone, or when things get better, suddenly your positions will be in a positive position. Suddenly your positions will be much higher than where it was before. And I just keep on giving this example all the time, because investing in the market, please remember this, it's not just a matter of principle anymore, it's a matter of history. I've seen it over and over and over and over and over again that markets go up. Good companies always go up. It's a matter of experience also that Jollibee 2007 was at 50 pesos. Then afterwards, the 2008 recession hit. Jollibee dropped to 35. From 50 to 35, Jollibee stock price dropped almost 30%. But look at where Jollibee is now. Jollibee is 300 plus. And Jollibee continues to be one of the biggest and best and brightest companies here. The same has happened to JG Summit, URC, DMC, Ali, RLC, and a lot of the good ones that started to drop years before. The greatest arbitrage for you is not to look at just now, but the greatest arbitrage is for you to place a large preference on, number one, how good the company is. Number two, how much they're growing, how massive they could actually be. And number three, start deploying as much capital, because it will always reverse. Don't look at, especially if you're busy. The truth of the fact of the matter is, you don't actually have to look at the day-to-day movements. Money in the market, if you're investing, is made on how good you position, how much you position, and how disciplined you are to ignore the volatility, to ignore the noise, and for you to actually just stick to your plan. If you flip-flop, change your plans, Every time emotions start to sink in, that's when it becomes murky. That's when money can be lost as well. For you to be good at this, just ignore your emotions, stick. If you are an investor, you have to stick to your fundamental analysis very well. You need to know the numbers because that's what will help you, that's what will protect you when things get emotional. And I'll say this over and over again, there's no shortcut eh. People always ask me, what's a good stock to buy, but they don't actually want to study it. That's hard. It doesn't work that way because what works for me won't work for you. That's why you need to have your own parameters that you can use so that you can also use that and develop your strategy around that. So, by the way, this is all what I'm saying right here. This is for investing because I do a lot of videos about trading. We have a lot of stocks by request. We have a lot of charting sessions together where it's really basically for people who want to trade the markets. But I'm not addressing the ones who are trading right now. I'm addressing the ones who want to be investors, who are investors and are suffering from this loss. Because you have to remember also when the market was at its highs, or not at its highs, when it was at 8,100, everyone was so excited to invest, thinking that it will go back to 8.5 or 8.9. But what if it doesn't go that way? What if for this year we just drag on from 8.1 to 7.5, 8.1 to 7.5? What do you do? What if for this year also you bought stocks that you bought Bloom at 13, now it's below 12 already? What if you bought MPI when it was above 5, now it's way below 5 also? So you need to have your plan when scenarios like that occur. You need to have a battle plan already when you see your stocks that you've bought start to go up and you are an investor. You need to be anchored on your fundamentals that as it drops to a lower level, you need to have cash also that you can deploy for you to add, but not just add, as should it drop further later on, you need to also have the discipline and the ideology that you will not be scared, you will not be frightened on the volatility of the markets, because again, this is normal. Markets drop, markets are volatile, things like this happen, and you will see this over and over and over. If you want to be in the market, kunyari, you're 35 right now, you want to be in the markets up until you're 70, 75, because by the way, for me, I'll be in the markets forever. But of course, the way I would segment my risk is that's why I've made videos about preferred shares and dividend paying stocks, because as I start to earn, I started to shift money from trading, from growth stocks to preferred shares, so that at least I have my passive income, at least I have my rental income right there. So, but my point being, if you want to stay in the market up until 70 and you're 35, imagine if you have 35 solid years of investing. So just looking at it from this perspective, for the next 35 years, there will be some years where the market will drop massively. There will be some years where the markets will crash, will correct. That's why today, 2019 should be your year to just build on that day, to build on the emotion that when it drops, when it falls, you know what you're supposed to do. So there, I think I'm gonna try to have my breakfast ready at the hotel for me to be able to prepare for my talk. So ayun lang, just a quick stroll. It's nice to be in Dubai at this time of the year. That's why you normally don't see me walk around in Dubai, during the summer times, because it's relatively hot. But since that it's still a cool breeze. It's nice. I wish we had this in the Philippines, that you would have a lot of months where it's not as humid. But I take opportunities like this. I take the time. I take I don't know. I just thrive in areas where it gets different. That's why I also recommend that for most of you, try to spend and put a certain amount of your budget for traveling. This is not connected to stocks anymore. But what does it do? It expands the way you think. It allows you to see best practices from different parts of the world, different cultures as well. Because when you see all of that, you can apply that to your business, to your work, to your investing, and it will allow you to see the world in a new, different set of lenses as well. So I guess that's it. This is just me walking on a Saturday morning here in Dubai, just sharing my insights on why the stock market is one of the best investments out there. The stock market is one of the greatest investments for the long term that you, as a Filipino, or not even a Filipino, if you are a foreigner or not, someone else who's not living in the Philippines that wants to learn about investing in the stock market, I hope you do, because you will thank yourself 5, 10, 20 years later on, because it's amazing. So that's it for now. Marvin Germo here in Dubai. I hope this video helps you trade well, trade strong, trade smart. See you again soon, guys, and God bless you.